fellow traders, coming to you with a video, and this one is actually a little different. What I'm going to be talking about is some of the terminologies that I use throughout my trading videos. Now, a few of my subscribers have asked me to just explain some of the terminologies that I use, because when they're trying to follow along, they're not understanding 100% what I'm saying. They can see what's happening, but they can't understand what I'm saying. So I'm just going to take this time to go over some of the terminologies that I use and explain using charts and other various things that I use to trade with. I use technical analysis a lot, and that's mostly what I'm going to be talking about today. I won't be going into details because most of these things can be found on Google or on YouTube, but I want this to be a one-stop shop. So I'm just going to go over basically, if not 100% of what I say and what I use to trade with, but 99% of it, so you can understand the next time you watch my videos. So I hope you understand everything. I hope I explain everything. So without further ado, here we go. So first we're going to talk about VWAP, and VWAP is the acronym for Value Weighted Average Price. Now, Investopedia describes it as the volume weighted average price is a trading benchmark used by traders that gives the average price a security has traded at throughout the day, based on both volume and price. It is important because it provides traders with insight into both the trend and value of a security. And I'll go into more details or a more practical explanation when I get to the charts. Now, HOD, that is high of day. I won't go into what it explains here, but HOD means the highest candle of the day. So we'll say, this stock is going to hit high of day, which is what the previous candle was at earlier in the day. And I'll explain that. I'm trying to be as layman as possible so you can understand, but I'll show you. Now, support, or the support level, is that level where the stock will hit majority of the time. Investopedia has it as support or support level refers to the price level that an asset does not fall below for a period of time. An asset support level is created by buyers entering the market whenever the asset dips to a lower price. I'll explain more when we get to the charts. Resistance. So resistance is actually the opposite of support, and Investopedia has it as resistance, or a resistance level is the price point at which the rise in the price of an asset is halted by the emergence of a growing number of sellers who wish to sell at that price. Again, I'll explain when we get to the charts. Fibonacci, or Fibonacci Retracement. Investopedia as it has, a Fibonacci retracement is a term used by technical analysis that refers to areas of support or resistance. Fibonacci retracement levels use horizontal lines to indicate where possible support and resistance levels are. Each level is associated with a percentage. Bearish action, bearish pattern, bearish flag, or bears. Now, one of the best ways that I've heard this bearish and bears explained is bears, when they stand on their hind legs to attack, they swipe down. So when the stock is going down, it's basically called a bearish action. Now, there are things like the bearish pattern that will, when formed, will show you or indicate to you that this stock is going to fall, this stock is going to drop in price, this stock is going to trend down. And you can also see flags formed, and when that certain flag is formed, it usually indicates that this stock is going to drop in price. So you'll have a bearish pattern formed or a bearish flag formed, and people who short sell stocks are usually called bears. So I'll explain further. Bullish is the opposite. Bullish action, bullish pattern, bullish flag, bulls, when they attack, they put their heads down and come up. So they come up with their horns. So when the stock is going up, it's usually called a bullish action, or the candle is a bullish candle, or when certain patterns are formed, you can notice that the stock is going to go up because it's formed into a bullish pattern. And same for the flag. When a flag is formed in a certain way, when it looks a certain way, it usually indicates that the stock is going to rise in price, the stock is going to go up. Trend lines. Now you have ascending and descending trend lines, and trend lines described as a line superimposed on a chart revealing the overall direction of the data. Higher highs, higher lows. You'll hear me say higher highs, higher lows. Best trading platform explained it as higher highs, higher lows define an upward trend, or lower trend, lower lows define a downward trend. Many traders pay attention to the progress of these points. Consolidation. Now, consolidation in a stock is the term for a stock for security that is neither continuing nor reversing a larger price trend. Consolidated stocks typically trend within limit price range and offer relative few trading opportunities until another pattern emerges. And that's why I encourage my subscribers that never to get into a stock that is consolidating, and wait until you see who is the more dominant, the bears or the bulls. Here's like a frog pattern, because the stock will just go up and then go down, go up and then go down, but not within a wide range. Short selling or shorting a stock. Now you know that you can buy a stock for it to go up in price. You buy it low, sell it high. For instance, you may buy a stock for $5 expecting that it's going to go to $10, and then you wait to sell it there. But you can also short a stock, meaning you sell a stock at a higher price for it to go down. Now, you actually don't own that stock when you're selling. You're actually borrowing that stock. So you borrow it, you get the stock at $10, and you wait until the price of the stock drops to say $5, and then you buy it back. So you will short sell. So you'll click the sell button at whatever price range you think. The stock is not going to go higher, but where you now think it's going to reverse. So you sell the stock there, and some platforms you'll see a short button, but on most you'll just see a sell button. So you'll click the sell button after you put in your number of shares and the price that you want to sell it at, and then when it drops to the level that you think that this is where it's gonna reverse, that's the bottom, that's where you should take profit, then you buy back that stock. And I'll explain further. Long or buy stock, which is the most common. I wouldn't say most common, because I'm a typical short seller, but for most of the brokerage company like Robinhood and Webull, Robinhood only allows long trading. Webull, you can go long as well, but you have to have $2,000 in equity to go short. They typically are more geared to long traders. So with that, you just buy a stock low and then sell it at a higher price. So when I say going long on a trade means I'm buying the stock low to go high. Okay, so first off, we're going to talk about VWAP. Now, VWAP can be found in most of your brokerage, your platform, and usually you find it where they have the indicators. So in Webull, you just click on here where it says indicators, and you have the M8 BOL, VWAP, MACD, RSI, and volume, or you see vol. So I usually use VWAP more than anything else. I do watch volume and I do take a look at the RSI, but not on Webull. I look at it in Finviz, and I'll show you that. So in order to draw VWAP on your thing, all you have to do is just select it. So right now it's selected. If I take it off, there it's gone. I just check it, and there it is, that yellow line right here. Now, like it says, value weighted average price, it follows along to the average price of where buyers are buying this stock. Now, it doesn't follow like the, let me see, like the MA. The MA follows the lines, while VWAP doesn't. VWAP stays where it calculates the average price of the stock is. So that's why I use VWAP and I don't use any other except the RSI, and I do watch volume as well. So like I said, all you have to do is just go in and select it, and it forms itself around your candlesticks. Now, HOD, high of day, in this case, and we're just looking at a stock here. We're looking at NK, which was one of the stocks that I traded on Friday. NK, so the high of day would be this candle here, the highest candle of the day. Usually stocks try to get up there. Sometimes it fails. Sometimes it bypasses it. In this case here, it bypassed it here, and it hit it there. So high of day is usually something that a lot of traders look at because stock might try to hit that level again. So the highest candle of the day here it bypassed it, and this became the new high of day, and now we have this one trying to hit it but failed. See that long wick? Now if you are not sure what a wick is, it's just like a regular candle. This is the body of the candle, and this slim section is what they call the wick. Here again is a wick, here again is a wick. So this is high of day explained. Now support. Here is where we would have a support level. Notice how all the candles are coming down to this section here. Let me just draw that line to show you what I'm talking about. That would be the support line. See, the candles keep hitting this support level. This is one of the major levels to where traders will try to hit so that they can get the lowest price, because they know it's a common price level that the stock will hit at. And if you go into the daily, you can actually also see it there. Even all the way to 2018, this line was present here. See, it was a support here, it became the resistance here, and I'll explain resistance. It was a support here. So all we're doing is just moving along the timeline. There again, it was support right here, all the way to 2020 here. 2017, okay, in 2017 it was here. So we drew our blue line here, and all the way back to 2017, this became a major support level, meaning the stocks actually sat on that price point for a while. Sat on here, didn't quite make it here. Sat on here, and sat on here. If we go into our minute, we can see the support level here. You can also find the other support level right here, where you have a bunch of stock just sitting on that line. So this is the support level. And like I said, stocks normally try to hit that line. If you notice, for quite a long time, the stocks were at this price point. Now, usually where you find the support line, you also find the resistance line, because stocks sometimes use that same line, or candlesticks are usually formed around that line as the resistance line. So you'll find it here as a support, then it became the resistance, support, then it became the resistance, 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 while here it was the support. So because it's a prominent or a very strong price point of the stocks usually consolidates around this level. So it'll try to hit it coming down, and it'll try to hit it going up. So people usually, or traders usually, take profit at that level, and that's why you'll find this kind of movements with the candlestick right there. Now, Fibonacci, you'll usually find that where you have your lines, or in this case on Webull, your joins. So you have your Fibonacci retracement, and this is basically all I use. Different platform have different Fibonacci. Here they have the Fibonacci retracement and the Fibonacci extension, Fibonacci time zones. You can go through them if you wish. Now on to Fibonacci. So Fibonacci, you'll find that on most platform where you'll have the lines, or in this case in Webull, the joins. Now here they have 3 of them, but the one I use is the Fibonacci retracement. So in getting that, you just select that, and what I do, I put it to the lowest candle, and Webull have that set up so perfectly that they already have that there, the price point there, and I'll take it all the way up to the top price point. So I'll start from the lowest price point here all the way to the highest price point. Now with Webull, it stays no matter what time frame you have it, the minute or the daily, but you can draw it on whichever time frame you want. So if you want it on the daily, right there we have it on the 30 minutes, we can put it on the daily here. So you just select it, start at the bottom all the way to the top point right there, and just release. And the reason why I use a Fibonacci retracement is, if you look at this closely, you'll see that the candlesticks usually forms around or close to the Fibonacci lines. If you look here, the Fibonacci line is also the support and the resistance line. Here it's the resistance line, down here support and resistance line, support line, hits this as a resistance line. So that is basically what the Fibonacci does. It can give you your entry and your exit points based on how the stock is moving. The Fibonacci lines indicate to me the perfect entry and exit for whichever stock I'm in. And if you notice, it forms, these candlesticks forms right around where these Fibonacci lines are. And you can go into any stock. Let's look at CIFS. Even on a stock that looks like this, if you draw it from the bottom all the way to the top, you can see that these candlesticks are forming right around where the fib lines are. And that's why I use a Fibonacci retracement to tell me when to get in and get out of a stock. Now, bearish action. So there are many things that can cause me to think that there are indication of bearish action. One of them is, if you can see this pattern, this actually indicates to me that that's a bearish setup right here. And also these two large bearish candlesticks. Now the red candlesticks are bearish, the green are bullish. So these two indicates to me that it is now, the stock is now going to be bearish, meaning it's going to go down. So we have this right here indicating that the stock is now trending under VWAP. It pops out red here, and these indicate also bearish action. So tells me that the stock is going to be going down. So what you would do in this case is you would draw your fib lines, and then you'll use this bearish setup here as a chance to get in. Now you can get in here at 604 and hold this stock to maybe this fib line, or even this fib line, or even this fib line. Now you notice that this did pop up and hit VWAP, but then it came all the way back down here. So you'll be holding this stock for a while if you hold it, but you would have gotten from $6 here all the way to $4.83, which is quite a big profit. Or you could have gotten out here with $1, or even here. Now we can talk about bullish action. Now this again was a bullish setup. There's another indication called the three white soldiers, and there it is right here. It popped out. It was consolidating for a while, popped out green. There was no red candle at all to be seen. This thing broke through the fib line. VWAP was trending up. All these are indication that this stock was gonna be bullish, meaning you could go long, meaning you can buy it to sell it at a higher price. So you could have gotten in here or here at this line, but I usually wait until it breaks it, and that's when you also look at the volume. These are the volume bars, and you could come out here if you want to be safe, or here, or here, or here. But this is dependent on the news of the stock, the volume of traders within that stock, the average trading range, as well as how sure you are that this stock is going to go higher. I just want to add in here, we were looking at this for long. Now, how would you know how far that trade would go, or high that trade would go, what the highest price point that trade would reach, and when to actually go in for a short? So one of the major things that I should have pointed out here is I usually go into the daily and try to find the highest point. Now, if you were watching this stock, there's nothing right here to indicate. You might have stopped here at this line at 845, but see, this stock went to 990. Now, if you were sure, maybe because of news or how you're reading this, or you're looking at all the data on this company, you might think that it may go higher. You can actually go all the way here to the weekly and draw your fib line. But like I said, how would you have known? But if you just go in as always and go to the highest candle, which would be on the weekly here, then you would see that this stock had the potential to go there. And if you look closely, right where it hit, if I could draw that line right here, let me just put that in a different color and make that a little thicker. You could see that this stock actually went all the way to this major support resistance level. So there was a potential that this stock could hit there, and you could hold it in anticipation that it would hit. Now there are different levels that it would have hit, and it's best to actually draw all these lines in so that you can watch it and take profit at these levels. If you notice where I'm drawing my lines, I'm putting in all the support and resistance. So here's the support, here's the resistance, here's the support, here is the resistance, here is support, resistance, support, resistance, support, resistance, support, support, resistance. So there are multiple levels within this Fibonacci on the weekly that this stock could have reached. Now let us go down and see if we can see it on the minute chart. No, let's go to the 2-hour chart. Okay, so this is our Fibonacci line. This is our Fibonacci line. These are the lines we just drew showing the support and resistance line. So if you were in this stock and you saw this pattern, and this pattern, I usually am very cautious of this pattern. Now this stock, it just came out and just start moving to the upside. Now here, if you want to be sure and you just got all your lines set in from the weekly level, which we just did, you would have set your profit taken here. You could set your profit taken here. You could set your profit taken here. That's how you can use both the Fibonacci lines and the support resistance line to tell you when to get in and get out of a trade. And all you had to do was go all the way back to the lowest candle to the highest candle to set your levels. So we did put in our fib lines and we did put in our support resistance line, and we saw that this actually did hit on them. Using the same stock here, if you notice, these candlesticks are getting higher while the green is a bullish candle, the red is a bearish candle. So the green candle are getting higher while the bearish candle are not getting as low. And now here it goes higher and the lows are not getting as low because this low is higher than this low, and this low is higher than this low, and this low is higher than this low. So now for lower highs and lower lows, you can see that on the other side here, the lows are getting lower while the highs are getting lower. So lower highs and lower lows. So that's what that means. The highs are getting lower and the lows are getting lower. Lower highs, lower lows. Now what do we mean by consolidation? Right here, if I take this off, right here is consolidation. All the way from here to here, this stock was consolidating between $3.90 and $3.40. So 50-cent span is the consolidation. This was consolidating from January 10th all the way to January 13th, just moving between 50 cents. And that's a good indication that this stock was going to pop. So if you were following this company and you see this moving just 50 cents all the time, it's not going any way below, not going any way high, you would notice that there is something in the mix, something's going to coming, so it will either just plummet or rise like that. So this is what consolidation means. Now, shorting a stock, what you would do, like I had indicated before, you would click on sell, you would put in your quantity, your share, and you would pick, if you're going limit, whatever price range you want to buy it at, expecting that this price, the stock price is going to drop from 735 all the way down. So if you're watching this stock and you think, yes, this is overextended, here are some bearish action here, you wait until the stock would hit VWAP, because VWAP, average trading price, is like a magnet. You know, the stock will want to hit that. If it hits it, there's a bearish candle here indicating that this stock, the buyers are pushing this stock down. You would put your sell price here at $6.31 right here, and you would sell this stock and hold it until you get the point at which you want to get out or buy it back. So if you got it at $6.30 here, or you could have even bought it at $6.09, you would have held it all the way down to here. Why you would get out here is because of this bounce here. So you would see this bounce, and from you see these candles going up, you could come out there, or you could hold it hoping that it's going to just reverse on this Fibonacci line and go all the way down. But in this case, it just hit on it, came back down, and then went higher. So that's shorting the stocks. You'll buy it up here. I'm sorry, you'll sell it up here and you'll buy it back down here. Now going long on a stock, if you were watching this stock and you thought, yes, here is a good point to get in, you would buy it here and then sell it somewhere up here. So that's going long on a trade. Now, I want to talk about trend lines. So right here, we actually have all three basically. Now, what you would do to draw your trend line is you'll find the lowest point and try to hit on as much points of the candles as you can. Now, a better way to do it would be drawing it like this and trying to hit on as much of the candlestick lines as possible. So I would draw my trend line there and can draw the lower trend line there. So that's an upward trend line. Here you draw your trend line as this. So it's hitting on as much candlestick as possible. And right over here, we can draw our other trend line. Here is another trend, which is also what you'd call a consolidation. Can you see that? Let me try to click on that so I can get the candlesticks right in there. Or we could even pull it up to here for another trend. So this is an upward trend. This is a downward trend. And if you notice, you draw it so that the candlesticks are hitting on these lines. And this is a consolidation, which is also a trend. So that's it for trend lines. Okay, so now I'm in FinViz, and this is what I wanted to show you. This is the same stock we were looking at in Webull, and the reason why I came over here is just to show you that it looks basically the same. And I also wanted to show you the other technical analysis that I use. But first, let me just show you again in another, in another platform here, the lower lows. See, they're coming down, and the higher highs. mean they're going up. Candlestick, wick here, candlestick. Consolidation here, also support line. It also has the Fibonacci retracement, so I can just show you that, how it looks here. And you can see that this line actually is also the support resistance line, support and resistance. We could go over into the daily, or let's try and see if we can get as much as possible. Let's try the 15 minutes. So if we draw from the bottom candle here, this is the lowest point of the wick all the way to the highest point of the wick, you can see how Fibonacci works here or looks here. And see Fibonacci again at its best as resistance here, support and resistance here, support, support, resistance, support, resistance. So you see on any platform, if you draw your Fibonacci line, it will show you or give you some indication as to where the stock price may hit. Now, what I just glanced at in here is the SMA, the simple moving average. Now you have the 50, the 200, and the 20. Let me see if I can get this a little brighter. So the bright orange one is the 50 moving average, and you can see it right here. The purple one is the 20 moving average, and the light yellow is the 200 moving average. You can barely see it. The reason why I just glance at these is I like to see when they cross. When they cross, the stock usually go into another direction. So, you know, I like to just look at it to see, did it cross it? Did these lines cross, just to tell me what is happening. One other thing I take a quick glance at is the RSI 14. And what I just do, I just look at this line because it's the indication to tell me whether the stock is overbought or oversold. Now, overbought would be up here, and oversold would be down here. So if this stock is bought up a lot of selling going on, this line will be going up. Or if it's oversold, meaning a lot of selling is going on, the line will be down here. And then what that will indicate to me is that if it's too far down here, there's a good chance that it will bounce back and start going up. Same in the reverse. If it's up here, then there's a good chance that it will be coming down, meaning that if it's oversold, chances are it will be coming back down. And I also look at the average trading range to see the average range at which this stock usually runs. Now, this is saying that this stock usually runs $1.15 on average. And that gives me some indication as to how much this stock can go. And if you look at this was at I think that's 730, 735, 736, all the way to 796 to $8.13. So this stock can run, and I like to see that. And I also look at the news to see what the catalyst is, and the catalyst is whatever moves this stock. So yeah, those are the other indication, other technical analysis that I use. These I just glance at just to give me some indication as to what this stock can actually do. Okay, I just hope that this helps in some way. Let me know if you like this video. Please like, subscribe, and share, and let me know what you think. Happy trading and all the best to you. Goodbye.